I'm going to show you the entry for New York session. Today is the 19th of February. So we've already swept out Asia's lows. We're below yesterday's New York lows. So now we're coming into the open. So the way I trade in opens is waiting for liquidity sweeps, waiting for the first presented fair value gap after 9:30. And then we're trading off of that gap for the most part. So as we can see here, as we get into 9:30, prices opened up. Carmen just swept out all of these highs here. So that's your first move. It's then sold off, creating our first presented fair value gap, which is this orange box, which I've marked out. Now to show you the entries, I'm going to be using paper trading just to give you a rough idea of how I trade. So I always trade with 4 micros. So as you can see, we set the entry for the bottom of the gap. I always want to risk $500. So we're looking about here. And then we're looking for 1-to-1 to move stops, undertake profits. So as we see prices coming in, respecting the gap, we do have a move to the downside. So once we see a move that breaks some previous structure, so once we see this move here, we then bring our stops to break even. So as you can see, within this trade, I was stopped out break even. So we're still $0 for the day. So as I said, the overall starting bias was bullish. We did see quite a few sets of liquidity resting above. So now we see a lot of chop back and forth, not really doing a whole lot of nothing. We see a break of structure to the upside here as we break out of here. And we've also broken out of the first presented fair value gap. So that is our first bullish sign. So once we see that, we'd be ready to now go long off of this gap. So once again, I'm using paper trading to show you how this looks. We would enter longs off of the fair value gap, £500 risk. So risk is below the lows. So we have that. And then profit, we're looking for 500 again, movement to the upside. As you can see with the candles, we have this big pullback here, which is very close to stopping us out of 500. But then we're starting to see price respect as consequent encroachment. We close back outside. Bodies are respecting the consequent encroachment. Another close outside with a break of this sort of high here. One last tap in, a run. We see this candle break this previous structure. So at that point, we would be coming to break even, which is here. It's respected. We then see this fair value gap, which is a very nice sign for us because it's breaking structure and created a gap. And then it's respected for a big push up here. At this point, as I said, we do reach our £500 profit, which is this level just here. So whenever I see that, I straight away trail my stops. So at this point, my stop loss is going to be right up here at $500. And then we do get tapped out in the very next candle. So a £500 day is what I'm looking for. I want no 1-to-1s. Obviously, if it runs farther than 500, you let it run. But we didn't take out London's high. After you can see, we did do a lot of chopping around. We're back into this value gap. It's sort of tapped through it, respecting 0.75. Now respecting consequent encroachment, respecting 0.25. So I wouldn't be surprised now if we do see price take out these highs, start coming up towards London. By Friday, I would expect to see these highs up here taken out. But we just wait and see.